All right, Trade Pros, good morning. Welcome to Morning Market Update. This is George from Trade Pro Academy. Hope you guys are having a terrific day. And we got a great update. It's Monday, it's fun time, and markets are open again. And it's a great opportunity to take advantage. I'm having some platform issues this morning. Not issues, but because I'm in the office today, my wife is at home doing a live streaming event for her business. She had to cancel her event in person and do it online. So, you know, two people, one home office. Doesn't work. All right, let's get started. Today's morning market update. Crude oil is down as much as 23%. All right, overnight to under $15 a barrel. That's the lowest level since March of 1999, which is a very long time, over 20 years. And it's lost almost a fifth of its value last week. All right, production cuts by producers wasn't really enough to offset the slumping demand. We know that. The big reason for the downside is the deficit of demand, which is due to the fact of the coronavirus pandemic. All right, so the May contract that this is quoted on is expiring tomorrow. It always expires on the Tuesday, the fourth Tuesday, but we stopped trading it the week before. So when it expires tomorrow, people are going to stop using it as a quote, and then it's going to look like oil went up, because then we're going to switch to the June contract, which fell 7% to $23 a barrel. All right, the spread between these two contracts usually around 50 cents, about 60, 75 maximum. I've seen it over $1, but to see an $8 to $10 difference, it's pretty astronomical. Part of the reason is that a lot of people now have to sell the May and then buy the June, which is creating the disparity because contracts are rolling over, and it expires officially tomorrow. So we're going to keep a close tab on that. Another news for oil that's pushing some of the prices lower today is that Russia increased their output by 1% in the last 3 days. So 1% doesn't sound like a lot, but 1% is a lot of their remaining capacity. And you have to remember that the OPEC Plus deals comes into effect on May 1st in 10 days or so, and they don't have to adhere to the deal beforehand. So they're kind of boosting that 1% or increasing their output, and then they're going to try to decrease it, right at May 1st, which obviously isn't good because that wasn't accounted for in the initial agreement. And so here is Russia pumping up their oil production, and they're set to cap it at 8.5 million barrels for 2 months from May. And it's a 2.5 million barrel cut from the 11 million baseline. But if they keep pumping it up, I don't blame them, to be honest with you. The production cut agreement didn't really help oil. And at this point, you got to sell what you got. All right. This week also, earnings are getting kicked in high gear. Nearly a fifth of S&P 500 companies are reporting this week, including Netflix, IBM, and Intel. All right. So here's an interesting thing. So far, 9% of the companies have reported Q1 earnings in the S&P 500. And, they've posted an average of minus 5% drop year over year. And according to their expectations for earnings per share, 43% have missed expectations, which is not a terrible number if you think about it, considering what's happened. Q1 is the one where we were going to suffer, the beginning stage of this coronavirus damage. Q2 is the interesting one, all right, because Goldman Sachs expects that the second quarter will show 123% plunge in earnings. So the second quarter is where the real damage is done. But it's saying that most investors, says Goldman Sachs, should just forget about 2020 and start looking at 2021. For some reason, we've written the year off. And I don't think that's priced into the S&P. I think one bad quarter is priced in. I think Q2 isn't priced in yet. And so when we start to get the second quarter announcements, how bad is it going to be? The thing about the second quarter is it's going to be all the way in July. By then, if we do start to rebound from coronavirus, it could just be a lost quarter, and we don't really even care about the earnings per share, how bad it was. Because then what would be more important is Q3, how good is the recovery? So earnings are always lagging. You need to know that. And it's not about what the earnings number is. It's about the market sentiment and what it's pricing in. That's the most important thing. All right. Donald Trump said that China may be knowingly responsible for this coronavirus outbreak. Okay. And he said in which case there would be consequences. Germany on the weekend published a fairly kind of direct and pointed article. It's in the press. It's not from the government towards China, saying that they're owed $150 billion of retribution for the fact that this coronavirus had spread. They said that, because it was there first, rather than covering it up, if they had shared information, they could have been stopped the damage much sooner. And so they're putting blame on China for $150 billion. It's the first time that a country, even though it's a newspaper, right? But it's the first time that these have been circulated with a figure that's seeking damages. I think if you could prove that somebody willingly, and purposely withheld information that caused, the ultimate loss, which is humans, that's willful negligence. All right. There is going to be consequences, as there should be. So that's interesting. We're kind of looking at this. White House task force said that the first nation to be exposed to a pandemic, has a moral obligation to be transparent. And that I agree with. Okay, in today's markets, Japan's down 1.2%. Hong Kong is down 0.2%. China's up 0.5%. India up 0.2%. It's kind of flat across the board in Asia. In Europe, flat also. London's up 0.1%. Paris down 0.2%. Frankfurt up 0.2% as well. Kind of hovering towards the flat territory. In the United States, Dow and S&P down almost a percentage point. NASDAQ down only 0.5%. And, I can't help but feel like that's being dragged down by crude oil. And once this crude oil contract expires, we're going to bump back up to the low 20s probably by then. But watch crude, because crude is having a big impact in stock markets as well at the moment. It is correlated with stocks. All right, and correlation isn't causation. We know that, but it's something that you should definitely keep your eye out on. All right, gold is back inside of 1,600. Is it there now? It just broke above 1,700 again on gold, but it's hovering around that 1,700 level. And this week is a key one for the stock market, okay? Because we've rebounded off the lows a significant amount, and there's a lot of overhead supply hanging. So I think this week we get a little bit of double-sided consolidation action for the first day or two, and then we see what's going to happen. We don't have many economic reports. We don't have anything significant today, tomorrow, or Wednesday. Thursday, we have unemployment claims. That's going to be interesting. And then flash manufacturing for the United States. That's 8:30 and 9:45 on Thursday. Until then, we don't have any key events. And then Friday, we close out with some data out of UK and the European Union. So nothing major. What we are going to be watching, though, is the S&P 500 companies that are reporting earnings. And so this week, you got to watch for a few things. Number one, this whole reopening effort, how does it develop? Do people go out there and, first of all, do things get reopened because of Corona or not? Number two, you got to watch the earnings. I think that's equally important. One's offense, one's defense. And the third thing you got to be tracking is oil this week. It's super active, it's super volatile, and it's causing a lot of investors who normally don't look at it closely to watch it very closely. All right, so it's your job to do the same. I love you guys. I hope you had a fantastic weekend. For anyone that's Orthodox Christian, you guys, happy Easter. We celebrated it this past weekend, literally yesterday. Kind of sad you didn't get a chance to see your families. I totally understand. And, I had a great weekend, and I hope you did too. Now it's work time. And speaking of work time, we're going to hand it off to Steven to talk about oil, and he's going to walk us through the oil report for this morning, give us some levels, and then we're going to take it back to Toronto to talk about equities, some levels that we're looking at for the long opportunities, and we're going to go there for the day. Love you guys. Be good on YouTube. Be careful. Manage your risk. Trade pro. There's no need to go out there and be a superhero today and this week. This week, start out managing the capital by protecting risk, and from there, good things shall come. All right. Yeah, Em, that's a good question. Em on YouTube asked something right before the lock. I was just about to click end. Why would oil prices result in going down lower? You'd think that cheaper energy would be more profits in the business. Short term, M, yes, cheaper oil is cheaper costs for companies, cheaper, raw material costs, cheaper shipping, cheaper transportation. Everything's cheaper for the short term. The long term, a lot of the economy is tied to oil. And so if oil stays here for the next 6 months, it doesn't matter how cheap it is if you go out of business. All right, you can have the cheapest costs in the world, but if there's no consumption of your products, just because you're able to build units cheaply doesn't mean anything. You can still go bankrupt. All right, and so that's kind of the downside. Anyways, I love you guys. You guys be good on YouTube. I'm going to throw our good friend Box in here and talk about oil. Take care, YouTube. Be careful. See you soon. Ciao.